please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, as we've been saying, tech major TCS will be in focus on the back of its Q3 numbers, which will be announced today. Sandip Agarwal, the VP-Wholesale Capital Markets at Edelweiss Financial Services, has joined us. What would you actually watch out for, Sandip? It's usually one of their down quarters for IT companies, the third quarter. But what will be the top three things you'll watch?
So, Lata, if you see, as you rightly mentioned, this quarter is a quarter of furloughs, which is seasonally weak quarter. Again, next quarter, that is the current quarter, Jan to March is also generally a weak quarter for the Indian IT space, barring one or two players. So, but the key thing is that this quarter holds a lot of relevance in the sense that, client budgets get freezed and, they give a sense of how they are going to spend in the upcoming year. So from that perspective, the commentaries are extremely important. So we are expecting a positive commentary from the BFSI space from TCS, because that is something which will be very, very important, because unless BFSI spends, a double-digit growth looks difficult, because 40% of the revenue comes from BFSI. So we would be keenly monitoring two commentaries. One is on the BFSI space, how TCS says, what their clients are saying, whether the budgets will go up slightly or not. And second key commentary will be industrialization of the digital spend, because till now we have been seeing that the digital spends are coming more in terms of as a percentage of revenues for startups and boutique firms versus the larger ones. Although early signs of some deals becoming $50 million we have seen in last quarter. So we would very keenly monitor whether the industrialization of the digital spend is also happening, which would imply that those spends will come to players of scale. So that will be a big benefit for players like Infosys, TCS, and the large outsourcers. So that is second commentary which we would look. And third and finally, we would like to see what the company says on the margins, because they have guided 26 to 28% for constant currency. It is not a guidance, but it is kind of direction. But with currency moving now, rupee appreciating to 63, we need to know whether they really hold their range or what is there to add. So these would be cool things. Also, I would like to highlight that we have to see how much of dividend they announce, because again, cash has accumulated over last 2-3 quarters post the buyback. So is there anything on that front also? Okay. So this will be the three key monitorables for TCS.
Sandip, good morning. The point here is how much of good news is now in the price, because the stock's at, I think, 52-week high, closer to its life highs, and is trading at the higher end of the valuation band.
So see, you are right. The stock has run up in anticipation. Also, it more or less builds in the FY20 numbers also now, because in this quarter, most of the analysts will move their estimates to FY20. So in fact, that move is also in the price. So looks quite expensive right now. But BFSI has not spent for 4 or 5 years. So if there is a big jump up in that commentary or that spend, then all the stocks will look much cheaper given the growth which can come, because even a $2-3 billion additional spend for the large 5 players would be very, very material. It would mean 7-8% incremental growth. So we have to see what is the commentary on BFSI.
Sandeep, what is your expectation as far as margins are concerned? Because give and take everything, they haven't been able to get even to the lower end of their margin guidance of 26 to 28%. Are we looking at a disappointment this time around as well?
So see, 26 I don't think will happen even in this quarter. But there could be some improvement versus last quarter, because you have to keep in mind that last quarter, now in this quarter, there are no additional costs. Like in first quarter, you have visa, then you have salary and wage hikes and all that. So we can further see improvement with, the pyramid rationalization happening. Although we are not building in any improvement because of the rupee movement and seasonal weakness. And also what we understand is this time the winters were very harsh. So I think manufacturing could have struggled a bit. So we are not building a margin improvement, but yes, there is a scope for improvement, because after first quarter, that is where your visa cost and wage hikes are there. In the rest of the 3 quarters, you generally try to bring back your margins. So there could be some improvement in margin, but I would doubt 26% will be there.
All right. We'll leave it at that, Sandeep, and we'll touch base with you